Volatility is your friend. Don't make it your enemy. Stop versus limit orders, though. I definitely want to talk about that.
I like that.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, you've been saying for quite a few weeks now that you need to recognize what kind of market you're in. What do you mean by that?
Perfect example. I was short beans, and then 2 minutes later, I regretted being short beans, and then I got out. And that's the kind of market that you're in. The tariff deal changed really quick with Mexico, and up it went. So this is going to be what the markets are for a while, and we have been through this once before in 2019, 2018 going into 19, I should say. So it's different, but it's the same. I meant chaos, and what's there 1 minute is not there the next minute. Stops get hit very easy. Got to be careful with what kind of orders you're using in this market, and really just be patient. The opportunities will be there. These are actually very good markets, but you can also get out of sync with them very easy, and they're very dangerous. So I mean, it cuts both ways. But for me, I like this chaos. I like the idea that stuff gets out of whack. That then I'll be there hopefully and see the opportunity.
So when you say recognize the market you're in, it's are things volatile? Are things not? Is there news risk? Is there what are the market risks at that moment?
Yeah, and a good rundown of this market would be calls are not making money very easily. Puts are not making money very easily, or they're not keeping their premiums, the profitable premiums. Longs are struggling and shorts are struggling. So I've covered everything. That really says that you need to be quick in these markets. Nothing is really trending very long one direction, and even the one that was cattle is now getting very volatile. So you just recognize that it isn't this slow trending market that you can just hop on. Things are going to change minute by minute. And that's the way the markets have been even before this. And it's going to kind of really speed that up, that in and out. So it is what they would call a trader's market, I believe. But it's very easy to get out of sync with that trader's market. Very confusing. Every call I get today was, this is what I heard. What should we do? And everybody's hearing something different. It really depends on what you subscribe to or what your news sources are. You're going to get a completely different story on Reddit than you would maybe on CNBC. It's a tale of two different worlds. So what you want to do is you want to be with a team that is looking at this through objective eyes and being ready for anything. And we saw that today. It looked like it was going to be a bloodbath overnight, and then by morning, very shortly after the open, things changed abruptly. We're probably headed for a lot more of that in the days ahead. And if it makes you feel any better, no one has the answer. That's the point. It's going to just be now a hour by hour basis. While we're recording this, Trudeau and Trump are supposed to talk, which I'm sure is going to affect the markets tonight. And then also Xi out of China is going to talk to Trump this afternoon. And again, what we say now might be completely different a few hours from now. That's the kind of market that we're in.
And so it sounds like you need a plan, or you need an idea so that you're ready to act when the market presents something, what do you tell your clients now of how to handle? I mean, especially from a hedging point of view. What are they looking for? Okay,
and even before the tariff scam, we were talking about this because people kind of forget this market's been running up for a long time, and it was tired looking before this even broke out. And now you have two camps of people that say they've been trading this for weeks, and then people say that they haven't been trading it at all. And it's been going up into the tariff, so I don't think they've been trading it for weeks, but some people think they have. So you just have a plan plan and stick to it. So what happened is the information changed today. So if you have a mental stop or a regular stop, I don't know how you feel about the stops.
Stops are for millennials, according to MSG on Twitter.
Yeah, which that's probably true. You just have to make sure you're following your plan because it is chaotic to some degree. Cattle and hogs were really affected by this to the negative, where Mexico changed things for corn today, but then beans led the way, which makes no sense to anybody. But that's the way it kind of fell today. There was a lot of different things that happened, and then you have the cryptos, you throw everything else in. But that's tough on a Sunday night with big news. You're going to get a lot of changes even by a Monday morning. The big players stepped in there. They like what they heard, and they bought most of everything across the board, including the stock market, except for cattle and hogs never really did recover at all. Actually, they were towards the lows.
But they did have some significant swings to start the day.
Yeah, they did, and those are going to be markets that are going to be really difficult to livestock for a little bit. And you saw both sides for sure. It opened down to $1.30, and that's kind of your best indication. Guys kind of wanted out, and I think it is because there are a lot of feeders go to Canada, and then obviously a lot of hogs. So that's the way the market kind of saw it. Feeders led the way down, but you're just going to have to navigate it day by day, and that's all there is to it. I wouldn't overcomplicate it because it's going to change quite often, and that's just the market that you're in.
Excellent. Well, you mentioned stops, and we talked briefly about those, but that brings to mind for me orders. So we don't need a stop till we have an order in there, unless we're doing a stop limit order. I know the limit orders tend to be your favorite, but let's talk.
Limit orders.
Let's talk market orders versus limit orders. Get into maybe some trade psychology, trade detail. What would you call that?
Yeah, I actually learned this from a broker I used to work with a long time ago. Good guy, still talk to him. When he said it to me, I was pretty young and I didn't understand what he meant. Limit orders only catch markets that are going against you, and market orders catch good markets and bad markets. So let's talk about limit orders versus market orders. I had a long time ago, there was a guy that, where's the bean market? And I would say $9.50. Put an order in for $9.49 3/4. He always wanted it a quarter better than what he saw no matter what. And in his mind, he thought he was getting it on sale. So what would happen is, let's just say we have 10 times he does this. There'll be one time where the market never did back up even a tick and it just went straight up. So you tend to miss out on markets that go your direction. Limit orders only catch it if the market goes through your order. So it's going the wrong way when you get filled, where market orders they can go right off the bat and just keep going that way. So over time, if you keep on missing out on those markets generally that you should be entering with limit, you're using limit orders, you miss 1 out of 10. Though that one is the market that would run your direction right away, and you're taking that out of the equation. Now, limit orders definitely have their places in commodities. I'm not saying don't use limit orders, but I can't tell you how many times overnight I look at maybe a spread and, it's kind of weak today, but I want a little, like July, November soybeans. I want to sell it, but I think it's going to be up a few tonight, and I'll get it for a penny better, and I'll put a limit order, and then you wake up, beans never did bounce, and that bear spread that you would have been in had you just got it because you wanted it is gaining 5 cents by the morning. Like that happens to me all the time. So I don't even follow my own advice. But I didn't understand it till I saw it over all these years. You miss that 1 out of 10 good markets, it can be significant. And I definitely have seen this on the profit side. I do try to go out of my way if a guy has a limit order to take profits at a certain level, to give him a call if it got really close, because often it doesn't get there. And I've seen limit orders not get filled. A guy I want $500 on this. He puts that limit order in to take profits there, and if it gets to 450, then it starts falling, and that can turn into a loss. So you see big swings my whole point is the guys that know the market they want to be in, you just go get that market. Now you don't do that in thin markets, and there, you know what I mean. But there, you want to go after that market if you want to go in. You don't want it to let it come to you, because sometimes it won't come to you. Now, if you have, let's say, 5 positions on of options, and you don't really need any more, but if they gave it to you, another one for you, that price, you take it. And I think you use those orders often, and I do too. There's different degrees of this. Like, if you don't need any more, but hey, if they gave me that deal, I would take it. That there's nothing wrong with that, because you have some on. It's when you take yourself out of the market before you even get involved that over time that adds up against you. So again, market orders catch good markets and bad markets, meaning markets that are going against you and markets that are going for you right away, where limit orders only catch markets that are going against you. That's it. Now, a lot of times they reverse and go the other way, and that's what you're used to with a good limit order fill. But oftentimes it won't get to your limit order, and it'll just go straight up. And I think I used a limit order today in soybeans. I didn't get filled, and I gave back $100. So if I just took my profit at right at the market, I wouldn't have gave back $100. I might have gave back, $12.50 with a bad skid, but I wouldn't have gave back $100. So it cost me $100 trying to get a little more today. And it's all relative. So back to the person that always wanted it for a quarter cent less. What I say is, why don't you just sell it a quarter cent above where you were going to get out, and take your profits there? And then they think about that. And then, of course, it doesn't make any sense, because it's all just relative. You are technically getting it cheaper, but really in the big scheme of things, you're going to miss out on some good markets. So we'll talk a lot more about that, because that's something you don't hear about. But I'm not saying go out there and just put all market orders in and go trade dry way and put a market order. In some markets, you have to use limit orders, and they definitely have their place. I'm talking specifically about markets that you want this trade on. It's close. You don't care that it's 10 minutes later or now. Like, that you want to own it for this reason. Just go own that market. It's market orders are better in that situation than a limit orders, where you use a limit order, it might not get to you, and then you miss out on that market. These are markets probably for limit orders. But again, if you see some breaking news before everybody else, market orders are going to be better in that situation. This is something we could talk about all day, but the whole takeaway is market orders catch good and bad markets, where limit orders only catch markets going against you when you're trying to enter a trade.
Yeah, you and I have talked about this a lot just in the office, and I lean much more toward limit orders.
And a majority of people do.
I use mostly limit orders, but I also don't just put my limit order in and leave it. I'm going to work the limit. And a big part of that is because I do trade mostly options, and the spread can be wide in there.
And so I would agree with you.
I'll use that and work it. Now, if I want to be in there, I'm going to work it way faster than something where it's maybe more of a wish or an ad or I want this put, but I only want it at the right price. Then I'll wait for that. And yes, it might go against me more, but also let's say I'm going to buy a put and I want 5 of them on. I might market the first one, but then watch how the put reacts to where I'm going to add the next ones. And that might be as limit orders or wish, that kind of positioning. So there's definitely a balance for both. Right?
And I do that with clients on the phone quite often. Like, how should we work this order? So we want to get a fill, but we also know in corn, and especially corn options, usually they'll give you that eighth. So you see a bid and ask, and it'll be an eighth apart. Sometimes a quarter. And then they'll usually give that eighth to you in corn. They don't advertise it's out there for sale, but you put that bid in there, and generally you're going to get hit. But if we don't, then I'm on the phone with them. Are we changing the orders? And then we'll cancel, replace till we get filled, and walk it up. And I do this process with them and talk to them about it. Other guys just call and use a limit order, and they call back. 2 hours later, did I get in? And again, it's not 50-50, but sometimes they don't, and then they really wish they wouldn't have. So it's just another thing to think about, but I'm specifically talking about markets that are liquid, that you want in. You know what I mean? You want in, but don't get cute with that. Let it come to me. I'm going to save $25. You're not saving anything. Again, right. Why don't you just price it for $25 more on profit when you're getting out, and then you realize how silly it all is talking like that. But again, I've traded dry away, and that's a market you're going to use a limit order in. Milk, probably another market. I mean, so you're going to have illiquid markets that you're going to be using limit orders in. But so far, futures, where it's deeply liquid out 6 years, use that market order if you want to get in there. Right. I think a lot of guys think that brokers are just, he just doesn't want to waste any time. He just wants me in and out of stuff. And that's not at all what I'm saying. It is, you're going to miss some very good markets by getting cute with it. But there's definitely a lot of, I use limit orders all the time, and you do too. I still don't even follow what I say. I'll probably tonight put a limit order, some order in there. But these are markets for nights where limit orders might, if they give it to me at that crazy price, I would take it. Yeah. They definitely fit in there. You wouldn't want to just be firing market orders necessarily in these thin markets. But you want to keep your powder dry in markets like this. There's going to be a lot of opportunities. None of it's really apparent right this second, but we should have wonderful things to do in this market. And some might say they're the best markets ever. I know one guy in particular that would say these are the strongest markets ever. But just have your head on a swivel and just recognize it's going to be chaos for a little bit. And there is a little bit of order in there. But I got caught by short beans today, and you just move on. You get out and don't fall in love with anything.
Yeah. That's easier said than done, right? But
it's going to turn around. It's going to turn around any second, and then they just keep going against you, don't they?
Yeah. Why is it? Let's tackle trade psychology here. Why is it so easy to hang on to losers and also easy to jump out of a winner?
I excel on that.
Yeah, me too. I think everyone does.
Everybody does.
I mean, you almost always get out of a winner too early.
Yep.
And you almost always hang on to a loser too long. What is the psychology?
I almost bought cattle the other day. Almost made that market top.
Nice.
No, it seems that way. It's really not. You can go back and look at all your trades. You're going to see that you actually got out pretty close to in or out, close to high or low. It just seems like that way. And in Vegas, Matt, I watch a lot on YouTube, and they play a lot of slots. Of course, I'm working, but after that, in my free time, I would never watch during the trading day. Right. But so anyway, so a lot of the bonuses, you need these 6 symbols, like 6 coins or 6 something to get to the bonus round, and it hits 5 all the time, but not that 6. So in their mind, one of their sayings is, you sure get 5 all the time. But really, if you went and looked at how many times they got 1s, 2s, 3s, and 4s, it probably is not way different than the 5s. It's just really noticeable when you're close. And it seems like you get 5 all the time instead of 6 when you're probably getting normal. It often feels like the market knows exactly what I got into, and it's trying to punish me. Everybody goes through those feelings. I don't think it's that personal unless they're watching a one-lot trader here today from Fergus Falls, but right. They could be.
Trust me, I'm not moving markets.
I've reeled back position size in this. I mean, I think probably everybody has.
Yeah. What else do we have on the list today, John? We kind of talked wild markets.
A lot of conversations I've been having on should I buy puts or shouldn't I through all this? And it's really a personal choice. Basically, it's buying like insurance. I don't like the time of year it is, but you obviously have a lot going on. So guys are really struggling with that. And I'm having a lot of conversations with different guys, and a lot of guys are doing different things. So some guys just want peace of mind, and they want to figure out how to protect it. So I've been having a ton of conversations on that. I wouldn't say a lot of puts have gotten bought yet, but a lot of guys are kicking the tires, or some guys are. It's really a personal preference. If this was June, with rain on the way and the trade war looked like it was just going to heat up, I'd be in a bigger hurry to get puts on this stuff. But we're in February now. We're at a time of year where you normally wouldn't have to worry about that, but you got lots going on. So guys are you can tell they're trying to decide what to do with old crop. Do I store it into summer? Do I put puts on it? What do I do with new new crop, that's even more confusing. So I would say there's just generally a lot of confusion on what to do with especially new crop here, beans and corn, and a lot of conversations on that.
Are there specific options that you're watching?
This is exactly what short dated's for. Short dated is probably the worst name ever for a type of option. People assume a short time period, but it's not. It's just simply the new crop in different time frames. So in other words, you don't have to buy a December 25 put with all that time. The more expensive. You can use different time frames for the new crop. And oftentimes it doesn't matter that much because they're just carrying the market and it's pretty quiet. But corn's two different markets. You have the old crop, and then you have 25 where they're staring at a lot of acres. So you have a very unique structure to this market this year. And this is a perfect year where you would be looking at short dated crops. So what's been the popular one so far? I'd say July. I swore off buying July calls in corn, and I don't know if I've ever told you the story, probably 100 times. That'd be me owning calls in 2012, the drought year, and of course that didn't work. So I don't like July puts or calls that much. But it seems like a reasonable amount of time. Other guys are looking at May. And then if you're not going to do those two time frames, you're probably looking at a September option. And that's not necessarily new crop if it goes in really late. But you're really stretched out all the way to September. You would not use September short dated, which I learned the hard way last year, because that actually goes off December 26th. So if it wasn't complicated enough, September, there is no short dated option there because it would basically be kind of a double up in that time period. So you either going to September or you're short dated May or July. Some guys are looking at March to get through the next 3 weeks. But it's easy come, easy go with short-term stuff. Last year, we went down into February. Oh, and I was going to add, one thing I've been talking about quite a bit is the spreads between March and May corn. That's getting wider every day, not really fast. And then the beans are at 15-year lows. So you can tell the funds are pushing this and the commercial channels are fairly full. So there's a lot of moving parts to these markets. The funds love them. They want to buy them. But if they weren't there, these markets would already be in trouble just because there's a lot in the commercial channels right now.
Yeah, that was gonna be my next question, was spreads and what you're watching. So I also saw, I think you had posted on Twitter a soybean spread. Are you're watching
corn
those?
Spread?
Just the corn spread, nothing on beans. Are you watching any spreads on beans?
I am watching the spread. I was just pointing out the 15-year lows and carry is not a good sign. Now that can change. You're going to want to watch that one going into deliveries. I'm not doing anything there, but I am doing stuff in corn. So give me a call if you want to know what's going on there. And I also tweeted out the May, July, it would have been on corn. Obviously, I didn't say much about it other than I gave some numbers of comparable years. So it looks like it's interesting, but it's not acting normal. So it's kind of confusing. It's in those comparable years, which would have been 23 and 22. Same exact number in January. The January report was 1.5 billion bushel carryover, but we got a very different structure. So then I talked to some commercial guys, and I've been talking to guys, and it seems like there's a lot of corn kicking around. I keep hearing about 50% left over on the farm. I hear that number quite often. So it seems like the commercial channels are full, and guys are deciding what they're going to do with the rest of the old crop. For right now, they're kind of staying pat, but I think a lot of it moved when May got above $5, from what I understand. So interesting. I don't have the answer there, but I am very interested in the spreads this year because they're not matching up with what we've seen in the recent past, really.
Makes sense. We should probably touch on the trade war. You wanna talk about Canada and Mexico and
yep. So
a little bit of China, maybe.
Day one, it didn't even last 24 hours. Mexico's talking, nothing's resolved. Now they're talking. We gave up something, they gave something, and now we're going to the table, and March 1st is the next deadline for them. Canada, totally different story. While we're on the air, it might be changing, while we're recording this. He's supposed to talk to Trudeau, I think, at 3:00. So U.S. Mexico looks good. U.S.-China is a mystery, and U.S.-Canada is a mystery. So it's kind of like following a hockey tournament.
Yeah, China's got some great hockey teams.
Yeah, so
does Mexico.
The first heat of the trade war, it looks like it's Mexico and U.S. talking, and that's why the markets were up. That went well.
I am curious from the Canada side what happens, just because their reaction has been so different from Mexico. I mean, to the point that I watched Minnesota Wild. They booed the national anthem when the Wild played them.
I could call my in-laws. I'm sure I'll get an impartial take from them.
You probably should, and we can.
No, I've already heard what they've thought. They're not either. They don't seem really pleased.
Okay. So, but do you think that then makes it drag out, or the leverage seems to be the U.S. side. We talked last week that this is Trump's playbook. Like, we've seen this.
Yeah, what's kind of surprising is we've actually seen this happen before, and everybody seems super surprised by all this, including the market not believing that he was going to do it to the date that he said he was going to do it. Then he did. It ultimately didn't matter. Because it reversed. But still, the market seems surprised that he did it. But we've kind of already been through this once before.
Right.
And then he did exactly what he said he was going to do. How it's all going to play out, I think, is going to be very different than last time. Last time was prolonged. The Canada and Mexico side was just NAFTA. It wasn't full-on tariffs. And then China was heavy tariffs, and this time it's lighter tariffs. But a lot of people don't even realize those tariffs from last trade war are still on China. These are 10% additional tariffs. So, it's just, again, I think a guy takes it day by day. Otherwise, you're going to drive yourself nuts.
I think the biggest thing is don't overreact to the first news.
Yeah. You're going to, is it even the news? Is it actually a news, or is it their spin on the news? So it's the same old news. Like, you're going to have one guy say this is what they heard. Like, none of it's really confirmed at all. And then you get confirmation later in the day, and you'll see this. You saw this in 2016, depending on how they want to spin it is the way the news goes. As long as you know that's going to happen and it's not going to change. I think that Twitter, somebody put out there, Twitter is the new real-time news. And I would agree. That's where everything breaks first. But still, it's going to be the markets before you read what you need to read to really react to it much. But you still, like, when it reversed today, within a minute, you could see why it reversed. Where traditional news, it would have took you, like supper time, you would have saw why it reversed today. So it's nice that way. We get the news faster. I don't know how helpful it is, other than I knew I had to get out of my short soybean really quick, and I did. But I got right back on that horse and got after it again and got some of that back.
Most likely the market book told you needed to get out of that before any
the
news
giant green candlesticks soaring straight up told me.
Right. Candlesticks. You were looking at a chart?
I got fancy.
Wow. Did you draw some lines on there?
Yeah, the more lines, everyone knows that correlates. The more lines you put on a chart to profitability. That's trading 101.
Yeah.
You throw 1,000 lines on there, you're going to make a lot of money.
I just started printing charts so I could draw them on with a ruler.
For people to think I'm just kidding. No, it's I would say I'm a tape reader. I watched every tick for many, many years. I'm not as good as like TikTok trading. He's the ultimate tape reader, but you can kind of see the flow of the market. Yes, the chart tells a tale. But for me, I just am watching every tick, and I wouldn't say it's just feel. It's just, recognizing what's going on and trying to react. And obviously levels are important. Everybody has their own blend of whatever they need. If charts work for you, great. I'm more of I would say tape reader for sure. And then definitely spreads, and I'm looking for divergences there for positions or spread positions, meaning like they've been bear spreading beans on the way up. July, November is one I've been involved in. And so, kind of tells you if it's a strong trend or a weak trend. So I'll combine that stuff. It doesn't give you the answer, but I just use a blend of stuff I'm looking at to try to figure out what I want to do. And divergence is a big one for me.
Excellent. Anything else to add today, Jen?
No, let's see what they say in these meetings, and we'll take it from there. No, just be careful. I bet these are going to be volatile times, and that's what I would expect. So I would say trade cautiously. What did you say that about stops? What was that again? I missed that.
Stops are for millennials.
Oh yeah, no, that is a good one. I like that one.
Yeah, thanks, MSG. Follow MSG on Twitter since he's the one who said it. But you need stops, whether that's mental or actually putting stops in.
Yeah, that's a whole.
I think in some of these markets, but
that's a whole nother episode. I do believe money management is if not the most important. It's very close. That's why I don't think what indicators you use is terribly important as having experience in the markets and then knowing when to exit. I think is what really, really helps a guy. Money management.
Absolutely. If they want actual recommendations, John, where would they reach you?
Yeah, this is something we can't do over the podcast, or you just we'd need to talk, and then you would either talk to your advisor, or you would talk to your broker, or you would talk to me, and then you come up with a plan and then execute it. Like recommendations, we talk about stuff we've been in that we're thinking about. Just watching a lot of stuff I track and I never get in, but none of these are recommendations. They're just ideas that we have, and you'd have to talk to us directly, and then we'd go a lot more in depth with it. On even stuff we talked about today. These are just all stuff I'm tracking, but I plan on maybe entering at one point, and you'd have to talk to me, and we would go through all that.
And what's your number?
218-731-1578.
Thanks, John.
Yep. Yeah, just recognize that we're trading chaos. But I'm still missing like the good, interesting thing to talk about. I was trying to think of it. I never did.